approaching 7th floor.
We'll see you around the timeline. Feels good to be back.
I think the Rollup is one of the most premier media brands in crypto, and Andy and Robbie are great experts at everything they talk about, and it's my favorite podcast.
Adding it to my library as we speak.
Potentially multi-chain deployments.
We are at Dev Connect Day 1 here. I'm with Jesse from Base. JP Morgan, BlackRock, DTCC, Fidelity, the entire thing was just institutions. It's next level. This industry is going to the next level. And guys, I don't know what else to say. I'm bullish.
He said it, he finally said it.
I'm so bullish.
Andy's bullish, I'm bullish, we're bullish. Is headed to the top. If we're not already at the top, we're going to the top.
We're going.
Rollup is my favorite.
From all walks of life, all over the world, all over this industry, come together for the Rollup.
Zoom out. The institutions aren't coming. They're simply here. It's the golden age of crypto, guys. Get right. Let's go.
Welcome to the nest. See you on the show.
Happy Monday, happy Monday, happy Monday from the tokenization tower here in the financial capital of the world. You are watching the Rollup. Today is July 13th. It is a bloody Monday out there. Get ready for Turnaround Tuesday tomorrow here. As always, guys, we're at the Nest powered by our friends at Plume. Visit plume.io to learn more about their asset management product, The Nest. Guys, I had a hell of a weekend. It was my birthday. I went down to Florida. I hung out with my family, played a bunch of golf, had a nice dinner or two, turned 27. So I am now 27 years old, out of the mid-20s into the mid to late 20s. Definitely feels old, but we're all right. We're all right. Market's a little down today. I guess we were restarting the Iranian conflict over the weekend. I guess our guy Trump was just getting a little bored, so press the red button. The Strait of Hormuz, who knows what's going on? We'll talk about it. Today we've got markets and weather. Robbie's going to join the show a little bit, maybe in like an hour or so, maybe a little bit less. He'll be back for the end of the show. He went to his sister's wedding. So his sister got married. My brother proposed 2 weekends ago. His sister got married this weekend. It was my birthday. So the boys are growing up. The older sibling of the boys are growing up. We've got the Transform VC CEO calling in and Tapper Protocols founder. Really, today's show is going over what happened in the markets for the weekend. Our portfolios are down a bit. Hype's down. PER's down. Zcash actually holding up quite well across the board. Some other things happening. So we'll get into that and more. As always, our topics are powered by our friends at Trezor. Visit Trezor.io. Use code ROLLUP10 to get 10% off at Trezor today. Let's get into the markets. Let's get into the weather. But before we do, let me tell you about Frax, building infrastructure for the future of digital money. Open, stable, borderless. Visit Frax.com to learn more about their FRX USD stablecoin and more. It is 80 degrees in New York. Guys, it was 96 in Florida. I played 27 holes of golf on Saturday, and I got a birdie, a single birdie, tons of pars, a couple doubles, couple triples, but maybe 5, 6, 7 pars, birdie, bunch of bogeys, and then some holes where you just, those golf holes where you hit the first drive out of bounds, and then your second shot is no good, and then you're just like, dude, well, I'm already at a triple bogey. I'm just gonna pick up. And so we had a couple of those as well, but it was a fun round. Had some great shots. As always, guys, our weather is powered by our friends at Relay. Visit relay.link for some of the smoothest cross-chain swaps in crypto. Let's get into the markets. And I know that's what you guys want to talk about. Let's first talk about Denari, building infrastructure of tokenized U.S. equities and bringing real-world stocks on chain. Visit denari.com to learn more. Guys, we had a bit of a weekend move upwards, actually. We had Bitcoin trading in the mid 60 range almost all weekend, just kind of chopping around. And then all of a sudden last night at about 8 p.m. Eastern, we got a just pretty gnarly candle on futures open. I think Trump was talking about bombing Iran again or something as soon as the 5 p.m. futures opened. And then now we're facing the consequences of that. And I think the market's a little bit shaken up by that. ETH at 1,773, actually holding up decent. Sol at 75, kind of at a must bounce area here on Sol. Chainlink 7.9, near showing some strength, relative strength, trading at 1.95 right now, and holding the line quite well. Lighter also holding the line. It is down 10% today from that big run that it had, topped out at about 2.73. Hype at 63.66. VVV at holding that $10 mark. Aerodrome under that 50-cent mark. So it had quite the pullback as well. Robinhood chain is really the talk of the town. If you guys got involved in that, I think that CashCat token did well, if I'm not mistaken. Let me just pull that up. I don't know. Did anybody get into CashCat? What's up, everyone? Hey, and NOC, what's going on, man? Hope you had a good weekend. What is CashCat doing? Everyone's getting excited about Robinhood meme coins. Haven't really done much there, to be honest, on my side. I kind of stayed away from all of that for now. It's at 150 mil still. So honestly, holding up pretty well. Did anybody get into any of those? Has anybody traded on CashCat or on Robinhood chain? Has anybody seen anything? The real thing here is that oil is up. Oil's up at 79, 78, 79. And yeah, people are a bit worried about this conflict. And I don't blame them. I think it's back in the driver's seat. The market's kind of treating it like it's not that big of a deal. But at the end of the day, what we're seeing is the market kind of be scared, because we all kind of thought that this Iran escalation was kind of coming to an end. But here we are, and it is July 13th, and we are firmly in the camp of this is not ending. So we'll have to see how that plays out. Obviously, the stock market's down a little bit today as well, if I am not mistaken. Check that out. S&P barely down 0.5%. NASDAQ down 2%. So it's getting hit quite a bit harder than the rest. So, yeah, guys, I mean, you know where we stand. We're, 3 to 4 months out of the end of this bear. I think it's clear that we're in the transitory phase. I would like to be bullish and say, look, the bear market's ending, the bull market's starting. But as you guys probably know, there's a period of time between the bear market ending and the bull market starting. And it's often just kind of like this time-based capitulation where you get a lot of sideways action and a lot of chop. And we have seen outperformance from Hype, from Zcash, from Aero, Near, Zama, some of these others. But until we get that continued, sustained Bitcoin stability, then we're just going to be in this kind of like choppy, time-based capitulation period where people will feel more and more likely that it's, coming to a halt, and they're in the transitory phase. I still think we have more room on this summer bounce. I think it's possible that we get quite a bit higher on the summer bounce throughout July. And so we'll see. And so, guys, that is the market. That's what's happening here. Let's get into the news. Before we do, let me tell you about Near and Near.com, your home for on-chain finance. One account, no borders, your financial life, all on-chain. Visit Near.com to learn more about how to manage your on-chain portfolio in one of the easiest ways possible. That's Near.com. All right, guys. So I saw this post, and Circle founder Jeremy Allaire shares his personal thesis on the agentic economy and on-chain finance. He says an economy run by software agents must run on software money, software contracts, and software governance, or it cannot run at all. He basically put out this entire, like what he called his like long-term thesis on the agentic economy. And he called it a treatise. And so I thought this was pretty interesting. He's basically arguing that agents are going to require instant settlement, micropayments, and programmable financial rails. Cue the Circle shill, cue the USDC shill. They will be well suited for this machine economy. I think it's something that we're all kind of anticipating here, right? Like we're all kind of anticipating what's going on in the future where agents will operate on chain. Will they use stablecoins? Will they use credit cards? What will they use? And I think it's pretty clear that there is a need for this agentic economy to be ran on stablecoins. And I think that's just going to continue to happen. And we expect it to continue to happen. And so we're on the same page here with Jeremy. And yeah, guys, let me know what you're holding. Mari NFT, good to see you, man. Yo, NOC, what's up, man? Good to see you. Guys, what are you holding in the market today? Did you guys take any trades this morning? What are your positions? What are you thinking about this Iran escalation? Yeah, what are you guys seeing out there? I'm seeing my portfolio getting a bit beaten down today. As I was saying, I expect a bit of a turnaround Tuesday after this Monday. But what are you guys seeing out there? What are you guys seeing? Let me know what you're seeing. All right, let's keep it rolling. I thought this was something that we needed to cover, not only for our portfolio within the show, as you guys know that we share a lot of the portfolio. What's up, fam? What's up, Kings Clips? Going on? So Hyperliquid announced that the RWA interest reached a new all-time high of 3.6 billion. Total open interest climbed to about 11 billion. Closed my short on Bitcoin. New Type said, yeah, man. I mean, New Type, you were saying that to us. I mean, I guess it was probably like last week when everyone was getting all bullish, like, oh my God, Bitcoin's flying. You're like, let's keep our emotions in check and let's see where we're at in a week. And like, this is the exact type of market condition, New Type, where the week by week is so rapidly changing. And especially when it comes to the upside, it's hard to really have that like longer term bullishness or faith in the upside. So Hyperliquid OI is above that 11 billion mark. I've got it up on the Perpetual Pulse site that I was telling you guys about. Aster's at 1.86 billion. Variational is beating Variational is beating Lighter and OI. So it's at 1.27 billion and volume just under a billion in 24 hour. It's got about 33% more OI than Lighter and about 33% less volume in 24 hours. So that's Variational. You got to think about how much they may be accounting for, like the trading of farming the airdrop. And again, I've been saying, guys, I think Variational is a decent one to allocate to, in terms of like thinking about that airdrop and trying to whether you're trading perps or just trading spot. I think that may be a good way to get basically some additional yield on your trade, right? So if they do the airdrop, the way you can think about it is that any trades that you've won or lost, you kind of get an additional yield on those by allocating for that airdrop. And I think it's going to come probably towards the end of summer. New Type says, yeah, man, W trade. Yeah, definitely. So, I mean, look, guys, this is the thesis this is like the thesis that keeps me bullish on hype and just in general on these purpose platforms is the OI, the volume and the revenue is going to be coming from non-crypto assets. And this ties very well into the next post as well from Frank, which is about tokenized stocks. So let's go into that. But before we do, let me tell you about Infinify, building DeFi infrastructure for simpler access to on-chain yield, liquidity, and capital allocation. To explore more efficient on-chain finance, visit infinify.xyz. And so basically, Frank's out here saying, in this chart, I quote tweeted as well, tokenized stocks grew from roughly 1.4% of the RWA market cap to over 15% in the last year. So monthly on-chain volume tells the same story, $117 million in July 2025, $3.4 billion in June 2026. Nearly 30x growth in a year. And yeah, I mean, this is going to be the story for the perps platforms and the spot trading dexes on chain. And basically, this is being led by Xstocks, Ondo, Denari, Solana's, Wormhole Sunrise platform. And so I think that this is, again, guys, if you think about the second and third order effects of this, the platforms that facilitate this happening on chain are going to be massively valuable in the future. Massively valuable. And so that continues to be our hyperliquid, Lighter, Aerodrome, Uniswap, Variational, Ondo, Kraken, Aave, Morpho, etc. thesis here is that these platforms will win. And I mean, I think that we continue to see that. And so I wanted to highlight this because it's funny that the industry that we've built here is actually for trading everything on chain, and we just didn't have that many good crypto assets. So what we've done is we've gone out and we've allowed people to just trade endless amount of stocks on chain. And look, I'm bullish on it. I'm excited, and these things are definitely moving from a niche experiment to a meaningful volume on chain. And I expect this to be a core driver of Solana's narrative and a core driver of perps for hyperliquid as well. And I'm bullish on this. Edward, what was a TLDR in that Lighter article that released last week? Need to make 100K or I'm clipped. Basically, they did the burn of their tokens and they burned a good amount of the LIT supply, and they released a ton of new order types as well. Michael Saylor equals Sam Bankman 2.0. All right, let's get into Michael Saylor. So Saylor announced that Strategy added $450 million to its USD reserve, and their total dollar reserves stand at $3 billion, which is enough for about 18 months of stretch yield payments. Strategy continues to hold what is now 843,775 Bitcoin on the balance sheet, and they sold a ton of MicroStrategy shares. And so people are kind of getting on Saylor here saying, why did you sell MicroStrategy and not sell more Bitcoin? And I'm honestly a bit thrown off here because I was hoping that he was selling more Bitcoin And that was leading to the market reacting in the way that it did in terms of the little bit of the pullback. But he didn't. He sold MSTR. And MSTR, let's see what it's trading at today. It's trading at 91, so it's holding. And stretch is at 86. So again, guys, our bull thesis on stretch was that it just comes back up to that 88 to 92 level and kind of sustains. We need to see another push this week on stretch. I'm honestly surprised it's not. Like this, what Saylor just did was set the market up so that we have 3 years of dividend, 18 months of dividend payments now in cash. So it means they don't need to do anything, and they have another 1.5 years of stretch dividend payments. If Bitcoin does nothing, they will be able to pay that off no matter what. So I don't know. I just thought that this could have been, and I would have hoped that Saylor sold more Bitcoin in this go around. And I think that's what the market wanted to see as well. And so I think the market is a little bit thrown off by Saylor selling MicroStrategy stock. I'm heavy in DeFi, revenue generation, value accrued to token, Sky, Hype, Uni, looking for the winners of this cycle. Agreed. Mr. Kobayashi, what's up, man? What's up? Good to see you here, buddy. Once Ken Griffin's daughter convinces her dad to provide liquidity to Lighter, Light goes to 10. Honestly, like low-key, Citadel's trading on Lighter doesn't even seem that far-fetched. Like, I think Citadel trading on Lighter and Hype and these platforms, I think it's going to happen. If not already. Ayub Khan, good to see you back, buddy. What's going on, Robinhood Crypto? So what's going on there is there's an absolute meme coin season happening. Cash Cat leading the way at 150 mil valuation. Have not really touched it at all. And I don't really plan to touch it. But I think that there's basically Vlad is pushing meme coins on the chain. Like he's pushing meme coins, and he knows that the way that they can bootstrap the Robinhood chain is to push meme coins and to have this kind of speculative mania happen on chain. Saylor will be the GOAT of GOATs when the bull run returns. I love MSTR at this cheap. I'm buy it all I can. Dougie Style, I hear you, man. I hear you. I'm curious, like, do you think he should have sold Bitcoin over MicroStrategy stock? I personally think he should have. I think that selling MicroStrategy sends the wrong signal to the market. Even though he can, it kind of achieves the same result. You know, you get because like what they want is they want Stretch to have the utmost amount of time and the maximum amount of time to pay the dividend payments that they owe twice a month. And so what they did was they gave themselves 18 months now with this additional sale of MicroStrategy stock. But the market wants Saylor to take his medicine. The market wants Saylor to eat his loss, sell a good bit of the Bitcoin, take his L, and restructure and be in a stronger position. Otherwise, people just think that the market's just going to continue to hunt him. And that's why I think that maybe this was not exactly the best move he could have made. I think it's better than nothing. I think Saylor should have definitely, needed to do something. Whether that was, sell MicroStrategy over Bitcoin, well, that's what he did. And I'm not Saylor. I can't tell you what he's going to do or what he should have done, but that's my take. Robinhood focused on RWA narratives? Yes, they are. Robinhood is focused on RWA narratives, but I think Vlad and co are smart enough to understand that the only way to get their chain off the ground is to very, very firmly start with the speculative mania and get people making money on chain. Because then when they make money on your chain, they're going to want to stay on your chain. Saylor is just a genius, and the haters will look like idiots they are when the bull run comes. I mean, look, Dougie Style, I hear what you're saying, but you can't argue that he's not in a really tough spot right now. I mean, he is in a tough spot right now, and he is in a $15 billion hole. $15 billion hole. So I don't know if losing $15 million is the genius that I know, but that is not exactly the one that was not, Saylor being down $15 billion was not in the cards for me. Was not in the cards. So look, man, I think that there's look, the market's going to hunt the guy out, and they're going to keep hunting him, and that's the problem. Hi, Andy. Happy belated birthday from Bulgaria. Thanks, Christian. Saylor really blew it with that 2029 CB repurchase only 1 month after the massive STRC raise. Yeah, I mean, honestly, I think people would argue that he blew it just with STRC, with just the launch of STRC as a whole. I think that they would argue that was a mistake. People would argue that he shouldn't have even done that. Happy birthday, Andy. Thank you. I don't like mean casino, believe in fundamentals. I agree, IOPCon, but I do think that for Robinhood to launch their chain that, they're going to need actual speculation on chain, and that's why we got what we got. Saylor will sell MSTR when MNAV is above 1 and sell Bitcoin when MNAV is below 1. So that's the formula. Edward, I think he's below 1 right now. What is MSTR MNAV? Where I think he's below 1. Oh no, he's not. He's at 1.07x right now. Okay. All right. You're right. Saylor dug himself in that hole. He's an idiot. Yeah, he did the most. He literally admitted to using AI to develop Stretch. Yeah, he did. Crazy. So guys, look, I mean, I think that this market is going to have trouble getting itself into any sort of bullish structure until Saylor is continued to be hunted. And I don't think you have to be in fear. I think our tokens, if you guys are new to the show, we've been very focused on fundamental cash flowing assets that have diversified revenue sources and have been outperforming the market in this bear market. And so I think we're going to be fine in that regard. However, do I think that the market wants to shake Saylor out more and really test what he's made of? Yes. Do I think that Saylor is bogging down the Bitcoin narrative as we know it? Yes. So that's my take on that. All right, guys, let's move on from Saylor because we've got more things with Iran and the Strait, and I think this kind of get us into the more macro. Before we do, let me tell you about LeFi, building infrastructure for cross-chain swaps, bridging, and routing across the on-chain economy. Visit lee.fi to learn more. So looks like Trump is basically saying that the Hormuz Strait is open and will remain open with or without Iran. This post frames America as the guardian of the Hormuz Strait. I don't know how Trump thinks that this is going to work, but all I know is that between Saylor and this war, we've got some real headwinds from the market. We've got some real headwinds that we really need to deal with, and it's not going to be easy to deal with. And so, look, I don't have much to add here, guys. I think that I honestly think that every time that we get this type of news, the importance of the news diminishes in the sense that, like, we get the war, then we get the resolution, then we get the war, then we get the resolution. Like, I think the next resolution announcement will have far less positive impact, just as this war announcement had far less negative impact than like the first one or the second one or the third one. And so I honestly think that the problem with what Trump's doing right now is that he's getting himself into irrelevant territory, which I know sounds crazy to say because he's a president of the United States of America, but he is getting himself into irrelevant territory with this war because the market isn't really reacting. Looks like Kalshi just released a new terminal/perps platform. I also saw that. Let's look at that after our guests today. We have two super cool guests today, guys. Guys, first of all, if you're watching right now on YouTube, on X, hit the like, throw us a retweet, throw us a subscribe. It means a lot. It's the easiest way to support our channel. We go live every single day here at the Empire State Building, 12:30 p.m. Eastern. It means the world. Throw us a like, throw us a subscribe. We really appreciate it. We've got an amazing first guest for you guys today. He is a very, very experienced investor, the CEO of Transform Ventures, known as the crypto godfather, Michael Terpin. He's an early Bitcoin investor who founded BitAngels and advised Ethereum in the earliest stages of growth as well. He has his 4-season cycle framework and launched a Genesis fund called the Bitcoin Super Cycle Genesis Fund.
Thanks.
An algorithmic Bitcoin-only hedge fund. In 2026, he will speak and has spoken at a lot of major conferences in the past. It will be a great conversation. We're gonna get Michael up. Before we do, we're gonna go a super quick standby, get him set up, get him dialed, and we'll be right back. Less than 30 seconds, guys. We'll have Michael up with us. Be right back. Alrighty, guys, we are here with Michael Terpin, the CEO of Transform Ventures, the crypto godfather himself. Michael, what's going on? I like your shirt, man.
Thank you. I'm just hanging out here in Puerto Rico, enjoying the weather, and keeping track of the markets.
There you go, man. There you go. The 4 seasons are certainly here. Let's get right into it, Michael. I mean, I think that I believe we're in the transitory phase of what has been a relatively manageable Bitcoin bear market, although it's felt more unmanageable than previous, perhaps because of the success of other markets in the time that Bitcoin was struggling for what people would have thought it should have done well. You kind of had this thesis about the 4 seasons of Bitcoin, and I think notably, we've got Saylor in his main character energy arc right now. Today he sold MicroStrategy shares to beef up his USD reserve up to $3 billion to pay off the stretch dividend. And so while we are in the middle of these kind of typical Bitcoin bear markets, as always, there are extraneous factors, this time being Saylor. Michael, walk us through the 4 seasons of crypto, kind of some of your philosophy here, and then maybe any of the nuances that are a bit more relevant to where we are today, given Saylor's influence in the market.
Sure. So it's the 4 seasons of Bitcoin, not crypto, although crypto markets tend to follow it somewhat, but they have their own dynamics. And I did put that in my book, Bitcoin Super Cycle, available on Amazon and in bookstores. Simon & Schuster distributes it. And basically, Satoshi in his early writings, white paper and thereafter, pretty much noted that if the amount of new money moving into the Bitcoin ecosystem every 4 years between the halvings exceeds the amount of inflation, the new Bitcoin, which is now very small, the price has to go up. It's math, and it always puzzled me in the early days, and I've been in Bitcoin since 2012 and got in heavily in 2013, why we had such wild volatility. And so I deduced, and so far it seems to be true, that even though the price always goes up as long as new users keep being added net every 4 years, so it was $12 for the first halving, $670 for the second halving 4 years later, $8,700 for the third halving, and $63,900 for the fourth halving, and the next halving should be higher because we keep on adding new wallets, new money. But the wild volatility is fear and greed, and that's true with other markets too. But here I identified that there were 4 distinct quadrants that happen every cycle in the same order, and I named them back in 2015, 16, after the 4 seasons in nature. So very, quickly, Bitcoin spring happens the day of the halving. It's when the seed of the new 4-year cycle coming up is planted, and in one block, miners go from being, somewhat profitable on average, maybe 10%, 15%. And in one block, they're wildly unprofitable. So if they're making 15%, they're all of a sudden have the same costs, half the rewards, now they're losing 35%. You would think that during that season that the prices would drop, but they don't. They actually stay flat, and then at the end kind of go up a little bit. And that's because A, there's not that many miners. as opposed to all Bitcoin that's out there now. And most of them have resources now. They're public companies, or they have a treasury. They know that the halving's coming up every 4 years. They can stockpile a little cash to pay themselves during that time without selling Bitcoin. And so what happens is that for every miner that is selling, or anybody who's selling Bitcoin during that very brief Bitcoin spring period, there's someone else willing to buy because they know that it's going to be up 4 years later. And so what's happened every halving now, 4 out of 4, is right after the halving, it stays flat. This last time, it stayed flat for about 7 months. The first time, it was flat for 4 months. And this is the one season that's sort of like just gradually growing. It was 4 months until Bitcoin summer hit, which is the day that you get a new all-time high. Then 5, then 6. This last time was 7. And in the depths of early Bitcoin winter or late Bitcoin fall, you think you're never going to see an all-time high again. But it's actually the shortest season. And so Bitcoin summer starts the day that you have a new all-time high. Very simple. So anybody can tell Bitcoin spring's first date. It's on the calendar, and anyone can tell Bitcoin summer's first date with a calculator. Is it $1 more than the old all-time high? Where you make all your money, if you're trying to not just buy and hold, but you're trying to know when to buy and sell, is correctly projecting the first day of Bitcoin fall, which is the day that the bubble pops, and you identify as having popped and not being just a down leg on a way up to a higher high, and the day of capitulation, which we are nearing now. We may have already seen it at 57 and change. That was an early projection that I had for the high end. Or you may have one more leg down like we did in 2022 and we did in 2018. When capitulation happens, that's the start of Bitcoin winter, which has always been the longest season. It's kind of the season of apathy and disbelief and, okay, I'm out of crypto. All the tourists go away and the whales are waiting for a lower price that doesn't come. And eventually they realize that, okay, it's now the start of a new bull market. They start slowly buying back in from some of the stuff they may have sold at the top. And then, and then spring happens. This last time you had sort of this other season that I haven't quite decided, or partial season, I haven't quite decided what to call yet, which is we had a new all-time high a month before the halving. And I still think spring happens the day of the halving, and summer happens the day of the new all-time high after the halving. Because it's summer. It didn't start acting like summer this time until you had a new all-time high after the halving. So you had about a month where you had a new all-time high for that cycle. It didn't affect this cycle, other than it made it a higher number that you had to hit. And then Bitcoin winter goes on until the next halving, and things repeat. And you've had diminishing returns the whole time. First halving was 100x up, and then 87% down. The second one was 30x up and 83% down. The next cycle was I thought it was going to be up 10x, and it was only up 8x because of bad macro with Biden's war on crypto, etc. And then it was down 75%. So anybody that thought that this cycle was only going to go down 20 or 30% because institutions rule were wrong. And I said from the beginning that our best case was going to be around 60% drop. And worst case maybe 70, and we're kind of in that range now.
Yeah, we are. I mean, just looking at it, just purely on the chart, I mean, we're at 62 now. We bottomed out at that 57 mark in what was the top 126, so we're very close to that. But you did mention, and I do think that there are some changes this time around. Notably, I am anticipating the time that it takes to reach new all-time highs has been accelerated each cycle, or perhaps that's incorrect, but I am kind of in the camp that the topping on apathy that we did last bull run, right? We didn't have this euphoric, like, oh my gosh, had Bitcoin traded 150 to 170 rather than 120, I think we would have been in this phase of like mania craziness. But we kind of just had this very rounded, kind of like not so sexy top. A lot of people weren't positioned in Bitcoin. A lot of people were hoping for better performance in altcoins. That also did not happen. So it's just a bit of a different type of environment. And so you could think that this bear market would also be different. And my thesis is that it's going to take less time to get to a new all-time high than previous cycles. Do you agree with that or disagree?
That has been pretty consistent, right? So in other words, you have the diminishing return, and then you end up having the new all-time high. It's been slightly earlier. I mean, obviously this time you had one before the halving. I think that's going to happen a second time, because again, I think one reason why you didn't have euphoria is, doubling your money is one thing. Doing 100 times your money is something else, right? So when you went from $12 to even, $100, people were like, whoa. And then like when I went to like $500 and $1,000, that was just like people had never heard of that type of thing. And then 4 years later, when it went up 30x, and even when it was starting to approach that 100,000 mark, that it would have, I thought it was possible to hit 100,000. You just had to have a good macro, because historically, I've noted that you've had these diminishing returns that seem to be logarithmic. So before the halving, bottom to top was 3,000x, a tenth of a penny for the one sale that Marty Malmy made, $5 on PayPal for 5,050 Bitcoin, and went up to $30 and then crashed down to $1 after Mt. Gox failed, and that's 3,000 up and 97% down. The second cycle after the first halving was 100x and then 87% down. So, and then 30x and then should have been 10x, I thought, because 3,000, 130.
Yep.
Next one in that sequence is 10, and then the next one is 3. We only had 8, and then we had 9 at the end of the kind of ETF blip, but that still counted as a high for that cycle. And so I was expecting that we would have 3x the halving plus or minus macro, and everybody thought there'd be good macro because Trump was, the Bitcoin president, as I've called him, and you had a lot of tailwinds, but the headwinds were the tariffs. Every time Trump started tweeting about tariffs, threatening tariffs, the stock market and crypto in particular, got panicked, and that was one of the factors in the not so much on the 10-4 high, but the 10-10 black swan, where you had the tariffs, and then you had Binance selling really quickly and deleveraging its market makers, and just all sorts of things that were suspicious, let's say. And and then once it went down a certain amount, the charts took over and started people selling, and boom, we're in a bear market.
Yeah. And Michael, are you
ironically though, it was still exactly where the bear market's supposed to be. It was 35
Exactly.
months after the bottom.
Exactly. It's funny how it all works. That's why the technical analysis folks say that it's always in the charts, that the news happens, but it's always in the charts. Are you worried at all about the mining exodus to AI data center bubble happening there? Is that a cause for concern for the Bitcoin network?
Not at all. You got to remember, even with the AI exodus, our difficulty is still like 100 trillion. I mean, I think its peak was maybe 130 trillion. We've proven that we can operate the network. We did it for a year and a half on a difficulty level of 1. I don't think it's ever going to even get down to 1 billion, much less a million or 1. And when the price of Bitcoin goes back up and the cost of AI compute goes down, which it has been, there'll be a time when they're both economically viable. So and the algorithm typically will adjust to it. So I don't see the algorithm going down to anywhere near where it's going to be too little to secure the network. And again, if it comes down to where we're, difficulty level 1, I'm happy to whip out my laptop and start mining.
And then another kind of cause of concern is Saylor. It is this kind of co-opting of the Bitcoin narrative. People. It just seems like the market is trying to test, and the market will do what it needs to do to hunt Saylor, and it just feels like that keeps happening. He's playing defense. The market makers, whoever, the whales, the operation, the algo, will just continue to try to hunt him. Today he announced that they sold a bunch of their stock to re-up their stretch dividend runway. What is your consistent view of Michael Saylor's involvement in Bitcoin, and do you think that the market needs to hunt him further in order to find that bottom?
I mean, look, the reason why Stretch got in trouble was because of leverage, just like the yen carry trade. And people forget about that now. It was such a crisis a year and a half ago, or whatever that was. So people weren't content making 11.5%. They would say, oh, well, if it's going to always be around 100, I can go and lever up, and I can go and get 5x leverage on stretch. And therefore, since it's always going to be around 99, 100, I could be making 55% now instead of, and then all of a sudden they get collateral calls when it goes down. And once, the Jane Streets of the world notice this happening, they put out a lot of FUD. They say it's going to zero. Look, they tried to break USDC that was back dollar for dollar, and that went down to 88 cents because people thought, oh my God, Circle doesn't have any money. It's a scam. And it's just like, fear is a remarkable motivator, and short sellers, particularly the pros, take advantage of that. And Saylor did the right thing by basically, saying, no, look, guys, we have 30 years of this and that, and we're going to go and sell up to 1 point whatever billion to make sure that if the bear market stays around for years, which it won't, that we're still fine. I think the one thing he hasn't done yet that he should is buyback stretch. That actually makes more sense than selling MicroStrategy. Although again, MicroStrategy is trading below NAV, so it's actually more expensive for him to sell Bitcoin in terms of the overall balance sheet. But if he just simply took some of that money that he has in his coffers and bought back stretch, all of a sudden it would go back to 100, right? Because you have buyers. And at that point, all of a sudden, it stays there for a few days, and he shows that he'll keep that price up. Then people say, all right, crisis is over. The crisis is truly over when all of a sudden it goes away because Bitcoin, contrary to, the FUD going on with, I noticed most of the STRC unwinding, MicroStrategy going to zero are written by bankers, right? There was an article in Motley Fool or someone, and it's like, oh, retired banker from UBS. What kind of crypto expertise does he have? And it's very simple. It's, once you end up getting, I think it's at about 70,000, they can pay the dividend forever. I mean, it's just, if you don't think Bitcoin is ever going to be back to 70,000, you should just sell all your Bitcoin right now and be grateful. But obviously, we've been through these 4-year cycles before, and we're at right now what, I said in February when Saylor said the bottom was in, no, it's not. And I was like, the minority opinion. I said it in Hong Kong, and I had a Goldman Sachs guy debating me saying, oh, no, it's in, and institutions are controlling everything from here. It'll be 250K by the end of the year. The whales are selling, institutions are buying, always up. They were wrong. And then I was on a panel with 3 other people at Consensus in Miami, and I was the only one that didn't think we were going to be 250K by the end of the year for the same reasons. And, the cycles are not broken. Maybe someday they'll break, but right now they are not broken. And I think a common misperception is that because the inflation is so low, that means it's meaningless. No, you don't grade the inflation of 0.88% after the next having 0.44%. Even at 0.88, it's less than gold's annual inflation. It's about 1.5 to 2. You don't grade it against prior inflation levels. You grade it against demand, right? So if you have increasing demand and you have half the supply, that's what counts.
Yep.
And and so that's where I wanted to call the book 4 Seasons of Bitcoin, and my publisher liked Bitcoin Supercycle better because that's part of the narrative. Half the book talks about really explaining the cycles, but the cycles end up being modified, maybe not in the seasons, but in sort of the effect when they run into the S-curve of adoption that happens in every new technology that from cell phones to color TVs to automobiles. There's a great picture of Times Square, I think 10 years apart. I forget the years, let's say 1904 and 1914. And in the first picture, it was all horses in one car. And 10 years later, it was all cars. And so when you get this tipping point of adoption, which is usually around 5 to 8% of a market, it takes forever to get the, crossing the chasm, talked about this stuff too. Technology adoption life cycle. And the Gartner hype curve sort of emulates this cycle. There's this S curve that takes forever to get through the hump of the early adopters, who are the crazy people who will do anything to get their Bitcoin. They don't care about GUI. They don't care about regulation. They hate regulation. They just think this is going to change the world and replace the dollar. That's like 3 or 4% of the population. when you cross the chasm and all of a sudden it's not your crazy brother-in-law who's been, hiding out in the cave and hoarding Bitcoin, it's your sister who basically put it in her IRA. That's when you get the early mainstream adoption. And that's a much larger market. And that's kind of where we're moving into now. And with us moving into that, I think we're clearly in the early mainstream now. But, the super cycle effect happens during summer when all of a sudden you have supply shock. And the only time I could remember a true supply shock was in 2013 when literally Coinbase ran out of coins. I mean, and all these exchanges were just, having technical errors because they couldn't find enough coins to sell for the demand. And as a result, you had this squeeze where Bitcoin went from $100 to $1,000 in a very short period of time. Again, law of large numbers, you're not going to go from 60,000 to 600,000 in a couple months. And obviously, this won't happen until we're in the bull market. So let's say we're at 150 and then all of a sudden one day it goes to 180. That's going to get people's attention, even though that's not that big of a percent. And that would be your God candle, that all of a sudden retail FOMO's in. Oh my God, I got to get into Bitcoin. I got to mortgage the house. Probably with less intensity than when it went up 10, 20, 30, 50x.
Right.
Because even, if the halving's around, say, 140, 150, and it goes up to 180, that's still not that big of a thing. I mean, you'd literally to go up 3x from a halving at, say, 150, that'd be 450, and I don't think we're going to go that high. But people may think we're going to, and I do believe $1 million Bitcoin is inevitable, and I think it'll happen by 2037. I just don't think it's going to happen this next cycle.
Yeah, so that's a great kind of segue. I would just love to understand from the investor perspective what you anticipate the next 2 to 3 years of Bitcoin to look like based on your seasons, based on the upcoming halving date. What would be your, what's your best approximation of what you would expect just based on history and your understanding of these cycles? Walk us through kind of, from where we are today to, early 2029. What does that look like?
I'll take you through late 29.
Yeah.
So I believe we're still following the 4-year cycle. And anybody who says we're not, just look at the charts. We are. This is three cycles in a row where from bottom to top, the bubble popped 35 months after the bottom. I mean, and I wasn't sure it was going to be exactly 35 months again, but I did say in my book that it would pop in the last quarter of the year after the halving, and it did. And because the halving moves up a little bit, next time it might pop in the late third quarter, but I still don't see a scenario where all of a sudden it goes from being, your typical 9 to 11 months. It gets a little bit longer each time. But then the halving moves up a little bit. I don't see all of a sudden it's having a three-month bull market or a 2-year bull market. So I think that just under a year is still going to be consistent. I think that Bitcoin spring might be a little bit longer. I think that we're going to have another time where we get a new all-time high before the spring. But let me go back to your question about where we are now, where we're going to go, quarter by quarter. So right now we're at 62 and change. So we're right around that 200-week moving average that I said we needed to get below. We did not get below when we were the same price in February because the thing about moving averages, they move. Right. In February, they needed to have gotten below like 59, and they didn't. We eventually got below 59, but not in February. So we are now below the as of I think early June was when we first moved below the 200-week moving average, June 2nd, I think it was. And we've continued to go and struggle around that level. That's resistance and support. And historically, we're in the late phases. So this is a phase where you can do worse than to buy Bitcoin right now, but it might go lower. I'd say right now I'm at the 30 to 40% chance that the bottom's already in because it did hit that 57 mark that I had projected. But I think we're still more likely to have the bottom in October because another thing that's been consistent is 23 months, 3 times out of 3, that we hit the bottom 23 months after the initial high after the halving. Guess where that initial high is? October. And a lot of other things say October. Another thing that's been consistent is roughly 1 year after the bubble pops to the bottom. Where would that put us? October. There's 5 or 6 things that all end up in October. The only way that I see that not happening is one could argue, and a lot of people argued in February that for it to be February, that the number to track in terms of the initial all-time high is the one before the halving. And that's based on seller exhaustion, right? Or sorry, buyer exhaustion. Yeah, you've been buying for almost 2 years, you're kind of done buying. You know, that did not happen, you know, in terms of like Bitcoin summer. What happens is as soon as you hit that number, it goes up like a rocket ship, and it did not continue when the halving, it went down. So to me, that meant that the Bitcoin summer doesn't start the new all-time high of last cycle, it starts the new all-time high of the current cycle. And so far, I've vindicated on that one. So that again, I mean, if it ended up June being the bottom, you could argue that it was a split between February if you counted the old way and October if you counted the new way. The midpoint is June. But interestingly enough, the last two midterm bear markets, 2022 and 2018, both had dumps in February and dumps in June, but they were never the final dump. They were always fourth quarter. It was November 4 years ago with FTX, and that was about a 20% dump from the prior low after Celsius, and it started inching up, right? And people were thinking, oh, we're done, and then FTX happened. And what the interesting thing is, did FTX cause the dump, or did the dump cause FTX? I mean, I think it's somewhere in between. I think that you're vulnerable to a shock until you've had real capitulation. And really, the Celsius dump had some pretty good signs of consolidation, but there was still, you know, people thinking it could go lower. But there were people thinking it could go lower even after FTX. So I think that there's no way that February was capitulation, because it didn't capitulate. It went up 10% the next day. And here in June, it sort of laid flat. So I think that that's why I'm raising, you know, my percentage chance that that June was the bottom to, you know, as much as 40%. I still think the more likely scenario is we go down a little bit more. It might only go down to 55. It might only go down to 53, because you usually also before capitulation get to the realized price, and I think that was most recently 53, and then after the bottom sometimes, but you always get to there's another one that's like 39K right now. It's a lot of different metrics, but they all don't have to happen every time. But I feel vindicated that at least the most consistent one, the 200-week moving average, was reached and breached.
And so let's call it somewhere between today, which is July 13th, and the end of Q4. The bottom's
No. I think the bottom's in by the end of October. I think that's the worst case.
Okay, so worst case, the end of October. Then you mentioned
Bitcoin
at the
winter,
top,
and then Bitcoin
right, which is
winter
the longest and most kind of dreadful part of it.
Yeah, and it starts out being really flat. Nobody believes, and every rally is you know, kind of crushed by people saying, "Oh my God, I never thought I'd get my Bitcoin out, you know, above." You know, in the last time 20K, and then 25K, and then 30K. And so now it'd be like, oh my God, I never thought I'd get my Bitcoin out above 80K. I never thought I'd get it out above 90K. And so every time you hit sort of a psychological level, particularly 100K, you're going to have people saying, oh, finally, I'm only losing, you know, 20% because I bought at the top, I'm out. And that happened last time. And, you know, the capitulation low was 15,000, I think it was 15.4. And that was November 10th, which is exactly 1 year to the day after the high. And then January 1st of the next year, almost 2 months later, it was 16,000, I think 100. So it was pretty darn flat from 15 and change to 16 and change. What happened to move it up into, well, I knew that it was the bottom was in when we had another sort of piece of really bad news, which everybody was waiting for the next bankruptcy. It happened, and it didn't move the market. That was Genesis Lending, which was you know, DCG's lending arm. They had a huge bankruptcy, and the price didn't fall. Why? There were no sellers left. You can't keep selling coins you don't have. At that point, anybody hadn't sold after Celsius and then after FTX, they were holding. They were holding, or they were out of coins to sell. And so at that point, when there's no more sellers, it's safe to buy.
And then so thinking about then what the rest of Q4, Q1, and Q2 looks like if we're on this more accelerated timeline, how do you think about when that, because obviously like the beginning of the crypto winter is the Bitcoin winter, sorry, is the end of the bear market. It's theoretically the beginning of the bull. Every time you look at back in hindsight at the bottom and you're like, that's the beginning of the bull, but it never feels like that. The beginning of the bull kind of feels 3 to 6 months later, you get a period of a couple of weeks where you're like, okay, this thing's not going back to those levels, and the market kind of catches up. But obviously, the smart money's already realized that, and you know they're in closer to those lows. A mentor of mine always says he tries to get out above the shoulders and above the shoulders in the bull and below the knees in the bear. You know, that's when what's so. What is
and that's basically the message of my book, which is you want to get out when. You know, fear and greed is above 90, and you know, and you know, you can just tell certain signs of the bubble top that I talked about in the book, and then get back in at the bottom, which we're already in. I mean, you could do worse than to just start buying Bitcoin here and just, you know, don't buy it above, say, maybe 70-ish or something, and buy even more when it goes down. But even if you bought at 70 and it goes up to 180, that's not a bad 3-year return. So I would say right now, we'll hit the bottom between now and let's say mid-October. And then it'll just sort of stay flat for a while and maybe start creeping up a little bit. Maybe you get over 70. I don't know that we'll get over 80 by the end of the year. It might be too early, but you know, and then of course it'll come in as another down year unless it gets over the January 1st number, in which case it'd be a flat year, right? It would be a flat year that went down in the middle. Because again, when you talk about bear market years, like last year, you know, was when the bubble popped, but by December 30th, it was down. Well, that doesn't mean that it wasn't a bull market. It just meant that like it wasn't a calendar year bull market. Because, I mean, the 4-year cycle has never been 12 months per season. I mean, if the 4-year cycle was exactly 4 years, we would always have the halving on January 3rd, and we don't. And it moved up 6 weeks for the first halving from the Genesis block to the first halving being in late November. And then you had this wild disruption with mining that meant that the second halving didn't just move up to, like, say, October. It moved all the way up to July. And that is problematic in the sense that if we just keep on moving up about a month if we keep on having our typical 47-month cycles, you know, that have been, except for 2016, that means in a couple of cycles we will no longer be in the presidential year. We'll be at the end of the year prior to the presidential year. And I think that Satoshi, and I've said this in the book, I've said it many times, I don't think it's an accident that Satoshi picked the 4-year cycle and picked to start in a presidential year. Because a lot of other economic things go around that. And as a result, you end up having, you know, the midterms becomes a political football like it is now. I mean, the Democrats are running on, like, you know, their crypto policy is this is all Trump fraud, impeach him. And you know, and it's a shame that, you know, a party that at one point used to be for the little guy isn't recognizing the best equalizer of wealth. For somebody to be able to, like, go and, you know, but it is what it is right now.
It is weird how the technology that yes, as you say, should be firmly supported by the Democratic Party has flipped into such a conservative, Republican, capitalistic structural divide. Now, kind of just getting back to the top question there. So I agree. I mean, I've seen some of the best analysts that I know and just folks speak about the kind of pricing structure. And we have Virtual Bake in front of the show in the chat says 53K realized prices, solid spot, just call it a buy. That's where we're at. That's probably where we're going, or at least in this range. I agree. I don't think we really get above 80 this year. I think that would be a miracle. I wouldn't be surprised if we touch 76, 75 in the end of Q4.
Well, 75 is like a historic resistance point, right? That's when you bounced off of I mean, that's really when the last all-time high that you had to pass to go into Bitcoin summer was at 73.8. And then when it crashed down from Liberation Day, I said when it hit 75, I was like, it ain't going any lower. It's already retraced the cycle. And so I think that 75 is going to be your pivot point again to basically say we're clearly in a bull market if it stays closes above 75 and then closes above 80. And I think that could happen by December, but more likely Q1 of next year. So let's say we finish the year around 75. So we're down somewhat for the year, even though we hit much lower depths. And then next year would be sort of your recovery year, which historically has been pretty strong. I mean, the recovery year of 2023 was really strong, right? It started at 16K and ended up at around 60. So that was stronger than even the bull market year. So I can see, because again we're going to have diminishing returns unless we start a true super cycle, which would not happen in next year, would not happen in 2027. But I can see 2027 starting around 75 and ending where we do reach the new all-time high before the end of the year. More likely start at 28. But
Oh, really? So
yeah,
you
because,
think
because
you don't
again,
think something like a year from now we'll be at a Bitcoin all-time high?
we could, but I think that
You think
since
that'd be
we
too
only
early
had it
then?
happen once, and it was only a few weeks before, and it had the driver of the ETFs,
Right.
And this pent-up demand. I don't know if there's going to be a similar,
Catalyst.
sort of catalyst. Yes, exactly.
Yeah.
I mean, if they don't pass the Clarity Act and the Democrats win the House, there's going to be nothing for the next 2 years other than impeachment hearings. And so I don't see how that could be a real positive macro thing to. I mean, but again, because it was only 2x. I mean, if we start the year around 75 and end it around 110 or something like that, you're then getting sort of like, oh, I think I can. I mean, you had that at the end of I think it was 2016 when you were trying to think, are we ever going to be over $1,000 Bitcoin again? Because that was in December of 2013. You went 2014, 2015, 2016, 3 full years without getting back to that. And sure enough, in Q1 you ended up not only getting to 1,000, but you got to the all-time high of 1,200. And as soon as that happened, then you went up like a rocket ship and started the whole 2017 30x bull market.
So then you could argue 2027 would be one could call it, terminology aside, like a bullish accumulation year. You're going to see price movement to the upside, likely ending up with an all-time high, perhaps in the end of the year or sometime in early 2028. And then 2028 is like is what you would call the Bitcoin bull market year.
Well, there's 3 years of a bull market if you're basically saying from the bottom to the top. And so year one I would call pre-halving bull. In other words, it's moving up, even though it's, second year would be halving year bull. That's usually when you end up, getting your new all-time high that kicks you into Bitcoin summer. And then the third year is the final, the kind of like bubble pop, the bubble year. Yep. And so the question is, if we're in a super cycle, then we go beyond the diminishing returns. Because if you're looking at the diminishing returns having been 3,000x before the halving on very small numbers, and then 100x on still fairly small numbers, and then 30x, and then should have been 10x but was 8x, should have been 3x but was 2x. What's the next thing? 30%? I mean,
I hear you.
I mean, you're never going to get to $1 million, much less $10 million Bitcoin, if it's just flat forever going forward. And so you have to have that S curve of adoption overlay. That means for one period of a couple of cycles, you end up having the mainstream come in, right? Right. Because we're still only 4 to 5% of the world having any Bitcoin. Not crypto. Crypto.com thinks we're around 7 or 8%, but people like this. There are people who only have Shiba Inu, or they only have Doge. Or Ripple or something. They only have meme coins, right? I don't have enough money to afford a Bitcoin, but I got like 1 million, garbage coins. And, at some point when Bitcoin is going parabolic, even by current definitions, 20% in a day is considered like, oh my God, we're going to the moon. 20% in a day back in 2013 was called Thursday. You had these things happen all the time. And so, with the definition that I have in the book of a super cycle comes from the commodities industry. And the CME actually had said that, this is back in maybe 22 or 23. It said that, there were 2 true super cycles that they defined as being at least 5 years where the price ended up moving beyond its normal behavior, usually up, based on a fundamental change in the thesis. So the first one was the 70s. gold went from $200 to $800 by the end of the decade, 4x.
Wow.
And that happened because two things fundamentally changed in gold. Number one, you had Nixon basically take the U.S. and ultimately the world off the gold standard. So all of a sudden, there was a change there that arguably made it more valuable, and because it didn't have to be like part of world commerce. And then number two, you had a little bit later, Americans were they let Americans buy gold again, because from the 1930s until the 1970s, it was illegal for Americans to own gold.
Yep.
Which was crazy to think of, right?
Yeah, it is.
And you were able to own silver, just not gold. And when you're all of a sudden able to own gold, now all of a sudden you have a reason to own gold, and a new class of people that could buy it. So it was inevitable that had I known that information, even though I was just a little kid, I would have bought a bunch of gold. I was actually collecting coins back then. I was, oh man, I'd love to get a gold, doubloon or whatever those things were.
Yeah.
Gold eagles, double eagles. Anyway,
Yeah.
so so that was the first one. The second one was in the 90s, and that was a broad-based commodities super cycle based on China. China started buying everything to industrialize. So copper went through the roof, nickel went through the roof, etc. And they had said at the CME that we see the seeds of a new super cycle based around monetary debasement and money printing. And sure enough, it happened. Had I read my own book, I would have, put more money of Bitcoin that I sold in 24 into gold and silver, instead of cash. So, or the S&P. So, that was the third super cycle, and I think we're, probably still in it, but it seems to have tamed down a little bit. Bitcoin super cycle is the same thing. You have to have so really the one that happened in 2013 wasn't a true super cycle, unless you figure that, 5 years from, 2013 to bubble popping in about 2018, that would count as 5 years. And you went from, $12 to 20,000. That's pretty good. And so, obviously, if you're going to go beyond the diminishing returns, that means you got to return more than, say, 30-40% from
all-time high.
From above the all-time high, or above the halving.
I mean, I think that would be a really, really people would be upset if this thing topped out in 2028 at 160K.
Right.
They'd be like, wow. They'd be like, that is
and my bottom is about 180, which is still disappointing, because that means that you might have I think that for sure the halving price will be higher than 126, because we do have new people in, and that's math. But if it's 150 and only goes up to 180, that would be roughly your 30%, right?
Yeah.
So no super cycle. But supply shock would be, I can't imagine there not being an excess of demand over supply when, all of a sudden you got all these onboarded, Morgan Stanley's and Charles Schwab's now saying you should put 1 to 5% of your money into ETFs, et cetera, et cetera. Now ETFs, of course, have meant that you're not really owning Bitcoin. When you're owning a DAT, you're kind of taking Bitcoin off the market, other than the small amount that Saylor sold. Whereas with with an ETF, you don't know what they're doing in the back end. You just own a claim on Bitcoin, and we know that they're playing games with your Bitcoin. And that's why they like it, and that's why they don't like Saylor, and they've been shorting the heck out of it, because they would like to have him go away and have the only institutional money be in the ETFs that they control.
And they can make fees off of it and all that, of course.
Yeah, and look, they make fees off of selling MicroStrategy, but they don't get to control the price of Bitcoin the way that they arguably do with ETFs. Yeah. And so, again, I would say if the super cycle happens, if the super cycle doesn't happen, we could have a pretty disappointing 2028 to 32 cycle, particularly if the Democrats win now and they don't have a compelling vote behind J.D. Vance or Rubio, and AOC sort of just becomes president and turns us into democratic socialist nation, and sort of puts massive bans on buying crypto and 90% wealth tax on crypto assets, etc. That could be a very very bad macro, and so you could see it being flat. And I don't think it means it's flat forever because the pendulum swings. If you end up having a democratic socialist country, you eventually will have a rebellion against that maybe 8 years later.
That's right.
Ideally, you'd end up not having that, so you either have a, kind of, I don't know if there are any conservative Democrats around anymore, but at least a moderate one. Or you end up getting, Vance or Rubio, even if you lose the House, you end up getting, kind of the Electoral College, voting in barely from the 7 states that matter, a Republican president, and, you at least have crypto still, in play in the United States. But I would say, again, going up to the halving, I think we'll hit a new all-time high either, end of 27, early 28. I think the halving, and again, a lot will depend on the elections, the midterms. I think that if you have the Republicans win the midterms, which is only about a 30 or 40% chance, but it's only about 30 districts that'll decide it. So it's certainly possible. Then I think you'll end up having, a euphoria rally, and you'll end up getting a new all-time high, perhaps even as early as November when the election happens, and that's good for crypto and good for Bitcoin. If you don't, it's probably going to be like again just before the halving, and maybe you get to 130 around February or March, and then March to April is sort of the projected time frame right now for the 2028 halving. So let's say we're at, I'll put a midpoint of neutral politics and say it's 135. If we have a super cycle, we'll be over 200. We might be over 300.
I think 315 is the number there.
It's possible, and it's what we have to see is whether the whales that cashed out heavy OTC at the top this last time do the same thing, and whether that gives TradFi the ammo to go and play games again, or whether now that they have all of the incentives to sell more ETFs for longer, they drive it even higher before they crash it. But I think that the control of manipulation where it happens has gone from mainly the whales to a mix of whales and Wall Street. And if they're selling to Wall Street, all of a sudden they're now private wealth clients of of these big banks that own all the ETFs. So
Michael, man, thank you for your time. I really appreciate the long-term kind of outlook and view on Bitcoin and on the market as a whole. I think somebody in the comments said that that this framework encouraged long-term thinking, patience, and rationality, something that is kind of hard to find in bear markets, but just generally in these speculative markets, crypto especially. So thanks for your time, for the outlook, and we'll definitely look forward to getting that book and getting into it a bit more. And I know our community enjoyed, so appreciate it.
Okay, thank you. And BitcoinSupercycle.ai, it's got the book on AI, and it's got the audio tapes on it.
Beautiful. Thanks, Michael. And we can find you on Twitter at Michael Terpin on X.
Right now I'm having a difficulty with my Twitter account. Trying to get control of it again from the slow moving people at X.
Support.
X support, but I am updating every day on my LinkedIn, which you can follow at it's just Michael Terpin.
Beautiful. Thanks for the time. Enjoy the weather down there in PR, and wish you the best through the next couple of months. And after October, we'll be have a more positive outlook, I think, in the space as a whole.
Happy to check in again.
All right, buddy. Thanks for your time.
Okay, thank you.
Cheers, guys. That was bullish. Guys, let me know in the chat what you think about the analysis, about the long-term view. I think it aligns with what we've been saying. One more quarter left here. I'm gonna take a super quick break. I'll come back and check the messages here in a minute. We'll get Robbie up. I'll be right back, guys.
We get deep, we get deep. You know we get deep. We get deep, we get deep. You know we get deep. You know we get deep, we get deep. You know we get deep. You know we get deep, we get deep. You know we get deep. You know we get deep, we get deep. You know we get deep. We get deep. We get deep. We get deep, you know we get deep. We get deep, we get deep, you know we get deep. We get deep, we get deep, you know we get deep. We get deep, we get deep, you know we get deep.
Yo, look who decided to show up, guys. Everybody, let's give some love for Rob in the chat, man. Yes, sir. Let's give Rob
Guys,
some love.
the time horizons are about to be stretched out a little bit, and he's going to be gone for like a month. We're going to miss him quite a bit, but
We
I'm
just had him
excited because
stretched.
we've been very zoomed in on about the 5-second charts and the technical
We just had him
analysis.
stretched
We're gonna
with Michael.
Zoom out
Michael
time
just took us
horizons and
to-
fundamental analysis.
He just took us to 2032 and the
With,
$1 million Bitcoin
the cash
with
balance
Michael.
on his
No,
balance
with
sheet.
Michael. No, Michael, the last guest just walked us through basically like what we've been hearing from the quant and from Michael and from the OGs is that October is the most likely low. So as we've been saying on the show, you got another quarter left or less. Like the end of October should be the end of it all. So July, August, September, that's Q3. End of October, worst case, the lows in, and then basically, maybe it could go to 53, maybe it could go to 48, maybe 50, 55, 30, 40% chance that it's already in, and likely end the year at the 75-ish, 70 to 80K mark, probably not above 80, and then just a slow grind up next year back to all-time highs on Bitcoin is likely the case. I think it's going to come sooner than later. I think it'll happen closer to about a year from now. So July, August, September range, ultimate high next year, maybe sooner. But Michael seems to think that it's much more likely to be Q4 next year or early 2028 into the halving in March and April of 2028, where we really start to get the explosive move into the end of 2028.
Sounds like a 4-year cycle. That's
exactly where we're at, pretty much.
There was that chart circulating around where they just lined them up. They put the colors. They said, 2014, 15. The interesting thing about that chart that I saw going around, I think it was the end of last week, was it was bear market for a year, pre-bull, and then bull market 1, bull market 2. And it was that pre-bull phase that I hadn't really seen, because typically it's like, okay, well, you kind of get, the bears and the bulls, but I like seeing that chart because it kind of laid things out more closely to what I remember from previous.
Well, yeah,
cycles.
that's what he was saying too. Basically, he was like, there's the pre-halving phase and then the post-halving phase, and like he called it that he actually says that Bitcoin's winter is going to start in October. Not that it's already started, and that's like the very choppy, slow-moving phase. And then he basically called next year as like the pre-halving bull market, and he said that in 2023 we went from 16K to 60 in 2023. So he said that it could be an explosive year. We could go from wherever we touch 57, 53, whatever it ends up being, down, up to maybe like 120 and 130. I mean, that would be a pretty explosive year in terms of price. But that, next year is really 2028 is where the big move is going to happen. So
Yeah, I can see it.
Lines up well for us.
Do you pay much attention to because there's consensus out there, and consensus has shifted from, not 4-year. Now we're, consensus out there is 4-year cycle. For, zooming in a little bit, consensus was one more leg down, right? Now it's kind of like, well, we're going to just stay right around this level. Maybe people are coming around to that idea. It's not quite as consensus as I think the one leg down camp was, but And so you kind of measure sentiment that way, consensus that way, just from talking heads on Twitter, and then you've got another measurement of the consensus from these these Kalshi, these poly market prediction markets of just these various time horizons, Bitcoin price on this day, will Bitcoin hit this price by the end of the year? Like, how much do you think it's a contra indicator? A good indicator, bad indicator? How much weight do you put on those, or just nothing at all? What do you think?
I don't know. I mean, I think our guy said there's a 30 to 40% chance that the 57K mark that we hit, what was that, like a couple weeks ago? Back in, when you were in Peru, the end of last month, was like the bottom. And then there's like all the factors are lining up into October. I don't know. I don't really. Like we'll pull up this chart, and it's kind of like what you're talking about. Let's pull this tweet up. You can see like the different, it's just like very obvious. Like, here's where we're at. Here's where we've been. It's really that simple. You scroll down, you can just see the 3 types. So I think I would just put way more credence to this than this just works. And it's just so funny how it works so similarly every time. I mean, 2019 was kind of a weird time because we did have that big pop before that next big drop back down to those lows because COVID. Yeah. But COVID was just kind of a blimp in that radar. 2019 was that ETF run, I think, is what happened there on Bitcoin. That wasn't 2019. That must have been 2023. I don't know what happened in 2019. I guess it was just the rebounding of that crazy dump.
2019, as far as I remember, was like blockchain, not Bitcoin. You had the ICO boom, but then you had a ton of SEC enforcement actions coming after those ICO companies. You had, what else happened in 2019? I mean, you had Ethereum start to develop a smart contract ecosystem. So, you had all the ICOs, a lot of those took place on Ethereum, but that was just a crowdfunding mechanism. 2019 is where you really actually started to see some smart contract and DeFi development, which, obviously led to DeFi summer in 2020. You also had, I believe it was like the Bitcoin Cash fork in Bitcoin. I think that might have been like
that was 2017. I thought.
I think it was 2018. I think that was 2018.
Nah, because I got the Bitcoin Cash airdrop in 2017 on Kraken.
That was 2017. Okay. Yeah. And so 2019. I mean, 2019 feels like that pre-bull phase. But
that's this chart's great because it's like the pre-bull is just the end of the bear.
Exactly. And that's what I was trying to get across is like
you mark that bottom. Like the bottom in hindsight is always like, oh, that's where the bull run started. But it never actually feels like that because it's like it just feels like another part of the bear run.
Well, it feels like the other great chart that just comes back time and time again is the Wall Street psychology. It's chop, then it's disbelief. This rally will fail like all the others. That's the one I always remember is disbelief. Like, is this rally will fail like all the others because you just get beat down by all of these bounty ball, little.
I know that's what it's been. Like we're gonna get one more of these things. This is probably another one. I mean, we'll see. I think this summer run has a little bit more legs left, but maybe it doesn't. Maybe you just got to sign off until. But I think until the end of August or something.
And the thing that I like about this is there's different ways to play this. I could understand an argument that says like, forget the entire pre-bull phase. Like there's an argument to be made. Like you don't even want to be here in 2027, even though the market, according to this, would go up. It's like still so choppy and you could still just make your nut in 28 and 29. Again, this is
but the buys are the buys of Bitcoin in Q3 and Q4 this year are the money spot.
I agree. And so that is where like it's the diminishing, it's the EV that tends to flip as you get deeper into that red territory and start to approach that blue territory where, look, if you have the patience, you can deal with some pain, you're not on leverage, then the timing of that is like, you want to be there for the beginning of the blue, right? So that you have these tremendous entries that, and then obviously there's exit strategies that go along with that. But yeah, I tend to agree, like be there for the blue phase because that'll set the tone for the rest of the cycle.
Yeah, I feel you. Just like Squirrel from Ice Age, I'm trying to make my nut. King says, where can I get the down low on the Robinhood meme pumps? We went over it in the beginning. Cash Cat and Vlad is pumping some other garbage. Not really interested. It is the way to bootstrap chains. We get that, but not really participating in that at this moment, to be honest.
The other thing to call out here, we just still have this on the screen, is that this is obviously Bitcoin, which is going to lead, is going to be a significant impact on pretty much everything else in the market. But I think it's, there are adjacent conditions that start to play out in each of these phases. Like you could say bear market, everything pretty much goes down.
Yep.
As you go into the beginning of that pre-bull phase, and this is again where I think today you called this a transitory phase that we're in right now. I agree. I think we're in this transitory phase. As we transition into that pre-bull phase, that's when I think we start to see these secular, market attention pops, which there's a lot of
like the leaders, right?
Well,
that's what you've been saying is like the leader, like you keep saying like the leaders in the bear are likely to be the leaders in the bull. The leaders in right now, the hypes, the Zcashes, the lighters, whatever else has been performing well, guys. That is when it really shows its strength is in that pre-bull phase. Yeah. And then what's ironic is that in the first and second bull, if you will, they actually may underperform or have one like great move at the end. But it's kind of weird. Like when everything's kind of starting to trend up, they will have like these, like, I think they'll have these really strong moves before everything, kind of setting the leadership. But then I think there's a chance that they actually don't even perform as well as the rest of things do when everything's giga bullish, because then you can just start pumping whatever you can pump.
And I think there's this rotation, like bear, you're very much in capital preservation mode. Pre-bull and this transitory phase, and we talked about it, it was almost this outperformance mentality. It was like, okay, everything else is flat to down. Can I get some sort of relative strength? That's what I'm looking for in the pre-bull phase. But I think you're absolutely right. Once you start to enter first and second bull, you end up with these things have gone up so much that I'm
that the risk.
I'm going to look for something that hasn't pumped yet.
That hasn't pumped yet.
Rotations.
100% is exactly that's exactly it. That's exactly it. I agree completely with that. So I still feel very cozy in the outperformers for now. If we do get another big dump on Bitcoin to like 51, 48, whatever, 53, I mean, I think we're going to take a hit for sure. But if Bitcoin trades 70K by the end of the year, or November, December, it's trading like 72, 74, something like that, then 80 maybe even, then these then those should really be starting their runs. And then like if we're in like a kind of a semi-bullish kind of slow trend up for Bitcoin early next year, those outperformers should do really well.
Yeah. I think we are going to enter some sort of mini volatility. Like, if you zoom in like deep into like exactly where we are right now, and you're just comparing to the last cycle, that is a look at the last cycle, right? Between the bear and the pre-bull phase, that is a BART. And I don't like technical analysis. I made that very clear, but like I like
that's
that
an inverse BART.
An inverse BART. And it's on a long time horizon. And I think you've got to just, and it almost looks like that has played out in the previous cycle as well, not as cleanly, but very, very similarly. And I think the question is, are we gearing up for like one more leg down? And
that's what you were saying.
Chop and then leg up. Or if you point at like the previous leg down, which I don't know what that would have been, but earlier this year, maybe Iran wars when we had that leg down, and then we do have a little bit of chop if you're just looking at the last few candles in the 2026 red zone. are we going to chop for a little bit more and then BART up? Which one of those is more likely?
Yeah.
That's sort of what I think we're weighing right now. But the point is that I think we're gearing up for some volatility. All of these treasury companies have taken so much supply off the table. That's going to lead to volatility both ways. And summer comes, people leave, they leave their computers. Like that, I think is just a call for like a low liquidity environment. And so you sort of, who knows? But I think the one certainty is volatility.
The last dump is coming. All right, guys, let's move into this next thing here. Trump's calling for the Senate to pass the Clarity Act. He says today that we cannot lose the AI war to China, and we are not losing it, and we cannot lose the crypto war to China either, calling it some of the most important technologies to date. And we're coming up on that hearing. It's in 4 days, so I take it that that's Friday. The 17th is that hearing where they will be discussing the Clarity Act in the Senate. Odds on Polymarket, I don't think are that high.
For Clarity?
Yeah, I don't really think it's great.
Last we saw, I think it was 40%, but it was dumping. It was around
Yeah, it's at 40% now.
Yeah, and it's just been steadily moving down.
It was at 46. It was at 46%. So when Trump said that, it dumped all the way down. So that news dropped today. What time was that at? 2:58 p.m. Today. That must have been, I don't know what time zone that server's in, but it came out around 11 a.m. or so. And so it looks like on Polymarket, the odds dropped 12% instantly to 21%. So you had a chance to buy at 12:15 p.m. today on Polymarket, you had a chance to buy 21% yes, and now we're back to 40%. So you doubled up if you bought that low on Polymarket today from the Clarity Act passing. They passed it on Friday, and on-chain discovery and Hyperliquid. I talked to Netanyahu.
What'd he say?
Yeah, what'd he say? Is right. Look, Rob, I don't have much to add here, but Virtual Bacon did have something to say that there are these listed digital commodity tokens in the Clarity Act text, and that he thinks that these will be some of the big winners. Chainlink's one of them, like Dogecoin's one of them. So it'll be interesting to see like how we go from like everybody wanting a DAT and the ETF to people wanting to get the government approval of them being a digital commodity now.
Remember, we talked at length about this. We were in DC in March, and there was a lot of fervor around the Clarity Act. We went through every classification. There is securities tokens, there is commodities tokens, there's stable coins, there's collectibles, I think, or they had another name for it, but NFTs fit into there.
Yes.
There was maybe one other tools, I think, as well, ENS names. There's a carve out. They make the stipulation and even call out some of those coins by name. But I think, and there's text that codifies this. So it's just a matter of like, now we know that the SEC and the CFTC have made it very clear what their position is and kind of what you can do, what you can't do, where you fit in. There are actually rules of the road now. Remember, Clarity Act is just going to put these into law so that the next administration and the ones afterwards would not change, right? As there's new SEC commissioners, these things would hold true as laws.
That's right. That's what we need. Unfortunately, we're getting Fed Waller just saying now that the Fed may need to consider near-term rate hikes and that inflation is broadly too high across the board.
I just don't take that seriously. The market's taking it seriously, but sure, inflation, but you look at the labor market, man. Like, I was talking to people over the weekend. They were like, yeah, we're going to lay off half of our company because AI. I spoke to one person who did get laid off. I saw Volkswagen was like cutting 50,000 jobs. Like, the labor displacement's real, and I don't think that they can raise rates going into labor displacement.
Yeah, well, that's what they're saying because inflation. So let's get into our daily.
I have one last thing to say here. Imagine if they can't do anything about labor displacement, because traditionally they would cut rates so that companies would hire more. But if you cut rates, wouldn't a company just spend double on their token usage. Like,
Yeah,
what
no, that is a weird conundrum to be in.
what do they still just continue to do what they're doing? They've just
Just
use
keep
the additional
spending on
like
AI.
cheap cash on more compute. So yeah,
Yeah.
Fed's in a
Yeah,
weird
I hear
spot,
you.
but I think Warship's going to do a good job. Daily equity.
Let's get into our daily equity, powered by our friends at Denari. U.S. households are holding a ton of money in equities. Let's get into it. Households are sitting on massive cash pile despite record equity exposure. Household equities, U.S. households now hold roughly $72 trillion in equity. This is $18 trillion more than above its long-term trend from 2009 to 2019. Stock ownership in households has doubled, more than doubled since 2020, and cash equivalent holdings are up to 20 trillion, an all-time high as well. This also exceeds the long-term trend by 5 trillion or 33%. By comparisons, households also own a record $11 trillion in debt securities such as bonds, $2.2 trillion or 25% above trend. American households have never had a bigger cash buffer. So like, I don't even know how you reconcile. Like, I get it, the equities are at all-time highs. People have a ton of cash. They don't have as much debt, or they have more debt as well, but it's still, in a reasonable range. So, I mean, what, is everyone just richer?
Yeah, I was like, as you were reading that, I was thinking the same thing. Like, what asset class is losing?
Yeah, Bitcoin holders apparently. But yeah, what's the take here? Like, elevated holdings across stocks, cash, and bonds point to unusually resilient household positions for Americans.
Yeah.
They're obviously heavily exposed to risk assets, but the record amount of cash on hand
shows
suggests that they have dry powder.
Yeah, and that this can continue, and it can just continue for longer, and the cash is going to be able to sustain. So obviously, maybe the biggest loser here is bonds. Like U.S. Treasuries, like typically like just very safe investments. Why am I going to go get 3.5% when I can go get 7.5% from the S&P? I think that's probably the losing asset class. I mean, Andy, the music's got to stop at some point in the equities market, no?
I don't know, man. I think this is basically just saying that we've been in a pretty strong secular bull run. Households have been investing heavily in equities. Last week, our daily equity talked about the amount of capital, percentage-wise, across portfolios allocated to equities versus real estate or commodities, et cetera. And so, I mean, we just continue to see that Americans aren't doing as bad as maybe the other data suggests. However, we're at a point where they're probably going to keep rates the same at the next meeting later this month. I highly doubt they're going to raise rates and potentially lower them later on this year. So, I mean, we know that's what the administration wants. I mean, my take from this is that there's a lot of demand for equities. There's going to be a lot of demand for tokenized equities. We covered that earlier on the show as well, that the sheer demand is we're up a matter of 10x in terms of volume and in terms of total amount of tokenized equities compared to July last year. Literally 10x across the board, DEX volume and total supply. So I just think that there's an insatiable demand for stocks right now, and we're seeing that happen on chain as well.
Yeah, I tend to agree, and I think my takeaway here is that it can continue to sustain. It actually is somewhat sustainable because the cash portion that households own is also at record highs. And so if you combine this and you actually do get some technological efficiencies and productivity gains as a result of AI, those are going to be deflationary. It is going to ease on the macro side if you get those productivity gains. And I think you also have this idea that, you have like the multiples on these companies are actually not as inflated as you might think, despite the market continuing to just creep higher and higher. I think we were at like something like recently we were at like a 28 or 29 like revenue multiple or average price earnings PE multiples, which I think is historically just average, does not show like super overextension of this market. So you take that, you couple that with, cash on hand. Yes, Americans are extremely concentrated in the equities markets.
Yes.
I think that may be the only thing that's sort of like off kilter here, but everything else seems to be at equilibrium. Cash holdings, revenue multiples, everything sort of seems pretty sustainable. The fact that more Americans are in the stock market maybe isn't such a bad thing. If we're just looking at the concentration of Americans in the equities markets, it could just be increased access. It could just be more Americans are learning about Robinhood. They're learning about financial tools. Social media has, been an education mechanism that has educated more people and allowed them to take more, ownership over their financial well-being. So, given that the rest of these things are on par, and if you isolate the variable to the one thing that looks a little bit different, it would be equity concentration. And maybe that's not such a bad thing.
Yep. I hear you, man. I agree. That's the end of our daily equity segment, guys. Powered by our friends at Denari. Visit denari.com to learn more about tokenized U.S. equities on chain. I'm going to pull my screen up here and get into some of the charts and see what we're seeing out there today. We're waiting for retirement to start kicking in with the baby boomers. Demographic shifts are hitting the USA. Okay, interesting. Starting to research big banking institutions. They will save big by using blockchain for the back end to infer and AI on the front end processes. Thoughts? I don't know. You tell us. What has your research been showing you? But I think it's probably likely. I think for anything financial services related, you're going to see an uptick in blockchain adoption, I would say. That's for sure. So I've got the chart up here of hype, of Bitcoin, and some others. Bitcoin hanging out. This is the 1 hour. So Sunday evening yesterday, we saw a really nice move down, 4% or so from the highs. Zooming out a bit more, daily, it's kind of just hanging on. That's not a really great looking daily. And then
Bitcoin?
we're here at these lows here that Michael was talking about, guys. That 200 MA, kind of just hanging on, man, hanging on. So look, I mean, this is October, so this is like the time. I mean, we just need to fill the rest of this chart out.
That's just not that many more candles.
No, it's like 10 or 12. It's not much.
On the weekly chart,
Yeah,
that's just 10 or 12. When you put it into perspective like that, that is not that much more time until October. And if you're just looking 4-year cycle, bear, pre-bull, bull 1, bull 2, I mean, the objective undisputed top was 1010 of last October, right?
Yep.
So you're looking at almost a clean 1 year from that.
Yep.
So I could see it. Again, it feels like we're transitioning. It's just a matter of, do we get another leg down? I think we kind of have a better sense of the timing now.
Yep.
If everything kind of goes according to plan, it's just, where are we going to be when those tides shift? Are we going to be much lower, or are we just going to kind of sideways chop till we get there?
Yep, I agree. Hype looks like a little bit weak, just kind of like chopping around. You'd probably anticipate some more chop in these ranges as these bigger MAs catch up.
What do you attribute this to? I mean, just lack of volatility.
I mean, yeah, here's this. This is interesting. So triple top with declining volume. Per climax seems over. ETFs launch euphoria waning. Neutral bearish bias for me here. You've got declining volume on all these pushes up across the board. Per obviously looks pretty bad. Pull up also declining volume. Then ETFs declining volume. So, yeah, I mean, this just looks like a little bit of a slowdown to be expected. Big run, but I don't know. Consolidation between 45, 50, and 70 doesn't really seem like the end of the world for me. Lighter, big red candle today, but really just catching up. I mean, these MAs have a long way to go. So this one's kind of just catching up. This one's really bullish, really, really strong consolidation at these levels.
Did we
at this
get
breakout point?
The other thing that I want to talk about is Robinhood Chain. it just feels like that's a flash in the pan that is we're going to look back and say, yeah, like one of the top 100 market cap companies in the world, one of the most influential, significant financial infrastructure companies for people in the younger generation, and the transfer of wealth happening. We're going to look back and say, like, yeah, that one was pretty obvious. Robinhood launching a chain was bullish. There's really not like, you can't really look at it like one way or the other. What did we get clarification on what the relationship is between Lighter and Robinhood?
They've got an instance of Lighter running on Robinhood chain. It's got a very, very small amount of liquidity, but it's just kind of getting bootstrapped now. And they're the official perps partner of the Robinhood wallet and of the application, basically. And so I think that's kind of like that was the news. And that's what pushed it up back over that, what was it, it was like that $2 breakout level.
Nice.
Somebody says, are we still bullish, guys? New Type was getting on us for being too bullish last week. Last week was bullish, this week's bearish. Welcome to the bear market. Bullish Jupiter. TA is 100% accurate, Rob.
Guys, TA
is astrology for men.
Is astrology for men.
Embarrassing.
Yes.
Yeah, the issue with hype here is that we had this level, this purple line, this astrological line that held every move, and now we're closing the daily under it. It's not great.
Oh boy. So we're
yeah, and then
now we're closing the daily under it. So what?
So I don't even know. I mean, this level's got to hold 6.7.
These things they can change at the drop of a hat. Like, there's one partnership, there's one announcement, there's one big Bitcoin move, and then all of a sudden, like, your MA just is a line on a chart. Like,
this thing looks great though, man.
What is this?
This thing looks
Zcash?
strong.
Yeah.
This thing looks good.
Yeah. So
it's just not. It could just roll over here, but it looks strong.
Yeah. So I was at a wedding over the weekend, and they said, "Give me one besides Bitcoin." I thought about it for a while.
Private Bitcoin.
What's that?
You told them to invest in private Bitcoin, in the next Bitcoin.
I told them cypherpunk, quantum resistant, private Bitcoin.
Cypherpunk.
Yeah, Zcash looks great. I think this is still very much intact.
Yes, it definitely is. It looks great.
And so then you think, like, yeah, I mean, New Type can get on us for being bullish and last week and bearish this week, and just market's choppy and we're just going with the wind. New Type, you're a real one. You stick around, appreciate you. So I do enjoy hearing your perspective. But again, like, I think there's nuance. I don't think we've been just generally bullish. I think we've been talking about this idea of outperformance, relative strength, and there are things out there with relative strength.
Yep.
We just had the Lighter chart that looked incredible last week. Robinhood chain thing went ballistic. The week before that, we were talking about Aerodrome. Oh yeah, if the line doesn't work, you just move the line, and then.
Well, that's kind of what I mean. Like, Sol needed to reclaim there, and it clearly just didn't. And so you can just move the line, and all of a sudden it's quite the bearish retest.
Yeah, I just drew it wrong the first time, but this one's perfect.
I mean, look how gnarly this dump was, and then it needed to hold, so it didn't. So we'll have to see what happens.
What is with this Solana bullishness? Is that real? Like, there was the whole, like, okay, people are talking about it, and okay, so maybe it's Ansem driving all of this, but then I saw a ton of people like, yup, Solana's, making it back, and like, they're not a meme coin trader anymore, and they had a partnership, and World Markets is going live, and it's like, okay, and then what's the next thing that's going to bring it back, and like revive the trenches? Oh, it's going to be the pump airdrop. It's like, okay, and then what? And then what?
New Type says, show me the chart and I'll show you the news, Rob. You guys have been going back and forth though. Nah, not really, man. My positions haven't really changed. I'm getting smoked in per. Hype's cooking me as well a little bit today, but it's been good. Probably anticipating more range boundness. Still have my long-term never sell Bitcoin, Arrow near, Zcash, kind of all just chopping away.
What was that you just had? Was that
That's
near?
Arrow, this near.
Yeah, like the thing that I see when I look at this, and you can see, I mean, I guess it's analysis because it's just based on the chart. But like, you know, and a lot of these other ones that we've been looking at, all of those moving averages they all follow a similar trajectory. This one is where you have some of those lines crossing over, where it feels like there's a bit more of a battle, you know, and you end up with like there is no trend right now. And so
exactly.
And so when you end up in those positions, well, I think those places are somewhat unsustainable. And then that is when I'm looking for volatility and I'm looking for a trend to form. Because I think
we're either going to bounce here and rip again, or we're going to have to come back and get back down and test these levels again lower, basically. I mean, up or down, right? Always. But I do hear you. Like, it is kind of more, it's squeezing.
Yeah.
You know, chart-wise, it's squeezing.
Right. And there's some uncertainty, you know?
Yeah,
and so you're not going
I
to have
agree.
people pile on one way or the other until it breaks, right? All
agree.
right, now we're looking at hype per.
Yep, HL Eco. So, yeah, per is just getting smoked still under MNAV, 0.88.
Man, it's what?
So there's a 12% discount there.
Seamus is just playing squash.
I think so. I don't think there's much else for him to do right now. It was outperforming for a bit today, but slowed down. Still have a bunch of cash. And then Hyperion. And I mean, look, they're still up 846 million. Like, it's kind of nuts, you know? So it's not like they're in trouble here.
Do you think that there's a hyperliquid to lighter rotation happening?
I don't know. It more just seems like there's a bit of a pullback in terms of performance across the board happening with this latest dump.
Okay.
I don't know. I don't think it's as much of like hype to lighter as it is big whales moving in and out into hype and out of it based on the price being in the 60s, 70s. People want value. They want value in the 50s, 40s is kind of where I think that they think that they'll have value.
Got it.
HLP3 crushing in terms of share of volume and crushing in terms of open interest. It's the highest open interest we've seen in HLP3. Covered it earlier on the show. This is the thesis. This is the perps thesis right here. This is what you want to see. You really want to see this thing grow, and that's what we're seeing. You have the SK Hynix, this Korean company, Korean like AI company. Tons of open interest.
Almost
Second
500
behind
million.
S&P, above the NASDAQ.
Mm-hmm.
So to me, this is the thesis. Still alive for lighter, variational, hyperliquid. Not really worried about it. Revenue's coming from different sources. Revenue has been down though a bit.
Look, I think that's going to be the main driver of price, albeit just, you know, broader market conditions. But I think, you know, you get into this like transitory phase. There is no trend, right? Range bound, low volatility, low liquidity over the summer means lower volume, or excuse me, lower open interest, lower volume, but lower revenue.
But we got actually the highest open interest on hyperliquid since 10/10 today. Where do we see total open interest? Yeah, we got the highest amount of open interest. And they turn on this priority fee, which is starting to grow in terms of share of revenue, and it's kind of cooking every day. Nothing crazy, but there is this priority fee kind of mechanism hitting now. Variation got a new facelift. Yes. Can y'all do the TLDR on the recent LIT article? Something about, yes, millisecond trading. Yes, they lowered their trading, basically the execution time from, it was a little bit over the human eye, all the way down to, I think, 10 milliseconds or 50. So it was like very, very, very fast, basically. They also introduced new types of orders.
Wow. Yeah.
And they burned a massive amount of the supply of the token. And then they posted the transaction hash of them burning it as well.
Very cool.
I thought Edward had that lighter stat board for us as well, but I'm not sure.
I'm sure there's one floating around here somewhere. The new order types from Lighter were especially cool. They had atomic orders, so kind of three buckets as I understand it. Atomic orders, which lets you do long or short. in multiple markets in a single transaction. So you can sort of like chain these trades together. Um, and this would be especially great if you have like correlated bets. I think this will unlock pair trades where, if I want to bet on ETH Bitcoin, right, I can take a hedged bet, go, long ETH, short Bitcoin if I just want to trade that ratio. There's other, obviously other pair trades that we could talk about. Advanced TWAP orders, the second one that I saw, which allows you to kind of disguise some of the things that you're doing. So like randomization would allow you to like, TWAP, but you don't want it to be very visible in the order book. So you can get somewhat more creative with that. Also aggressiveness. You can get like, depending on certain conditions that you can set, you can take more aggressive or less aggressive bets on how you TWAP. The third bucket that I saw was chase limit orders, which remain competitive in the order book without manually adjusting the orders. This one, like, I think is very cool, but I would want to experiment with it with like small size before really betting heavy on this, because I think this would actually chase up the market. Like you could set different criteria as to, what your execution, space you would want that to look like. And so, if you want to get executed in 30 minutes, or you want to get in at a certain price, but the order book is starting to move away from you, this might bring you back into a competitive place in the order book. Which is something that, before you move too far in one direction with size, you obviously want to, make sure that you have a solid grasp at how these markets and these execution styles work.
Can you explain the benefits of burning versus buyback? So they do buy it back, as you can see here in the article. They've bought back 15.5 million lit, representing 6.3 of the supply. And the community wanted to have more understanding of exactly how these tokens are going to be handled and managed and what that looks like. And so they basically ended up going through and doing the burn. So you can see here on Etherscan, 2 days ago, they sent the lighter treasury $37 million, and they sent it to the null address, the burn address. Wow. And so you can see that they successfully did the burn. And so that's
so base.
There's not really like any advantage to the burn. It's just part of the buyback mechanism, if that makes sense.
I mean, I think the take here is like, well, if a team is deciding to burn, I mean, I think this is just a signal of like, we're Chads. We have enough revenue that we don't have to reinvest this into our team because we're already making enough money that, anything more that we would buy or purchase or expend would just be diminishing returns. There's negative EV from spending this money on growing our business, and therefore we're going to choose to burn this money because it makes our stock appreciate. Like,
I think that's one take. I think the other take is clarity around for the community around what those like there's clarity around exactly what those tokens are going to be used for. Those tokens are not going to hit the market. It's more just about like really codifying that and not having it be an uncertain factor, etc.
But have they chosen and said that they're going to burn all of their bought back tokens, or is this
That's what they just did. That's what they just did here.
I understand, but they're going to make more revenue. They're going to do more buybacks for all future buybacks. Does this indicate that they're always going to burn them? Or,
I'm not sure.
Right.
I think so, though.
I would be careful with that because I could foresee them, making revenue, choosing not to reinvest it, but choosing to buy back their own token, but then using that token for an ecosystem project or a grant thing, or it doesn't necessarily mean that always and forever they're going to be burning their tokens that they buy back.
Yeah. I think this is the right take, though, from Sherpa. If you guys can get lighter at the 2 to 2, like if you get something, if you can get something like this, and then higher, I think that would be that would be the best outcome. I don't know the time frame on this, but something like this, I think is probably likely and would be a really great entry, I think. So Let me just show that. Is something like this would be nice. Get down here a bit and then have that be your entry. I think you'd be happy if you missed the lighter run. So, guys, I think that almost wraps the show for the day. Hell of a Monday. I think we get a turnaround Tuesday tomorrow across the board. Not too pressed.
Freedom Guy, we can see you. You were censored
Freedom
and
Guy.
banned, but now you're back. I don't know why you were censored and banned, but we can see your comment. Thank you for being with us.
Yes, I can see your comment. Yes, I think we get a turnaround Tuesday. No, it's not over. Yes, we've got a quarter left or so until the end of the bear. Yes, we're going to go to over 100K in 2027.
And you guys could try to be reductive and say we're bullish or we're bearish or we're bullish when the market goes up or we're bearish when the market goes down. But I think we're in this choppy transitory phase. There isn't just one size fits all way to look at the market right now. And that's what we try to bring to you guys. Try to bring to you guys the opportunities here. Try to show you that there is opportunities in the market despite this transitory choppy phase.
Yeah, and we covered Saylor, we covered Clarity, we covered the 4-year cycles, Per, Zcash Lighter, Near, Arrow, and more. We'll do more charts tomorrow. We'll do more analysis. We've got great guests tomorrow as well. Guys, it's just a bit of a rough day. That's okay. It is okay. We will be back like no other. BTC's fine. Crypto's fine. The markets are fine. This is what always happens in the cycles. We're going to be with you day in and day out. We're going to find the winners. We're going to execute. We're going to hold. We're going to do long-term spot swing trades, medium-term swing trades. We're going to outperform. We're going to keep doing what we've always done. You're going to be with us every day here in the Empire State, Rob down in Florida. Guys, if you're watching on YouTube, if you're watching on X, give us a like, throw us a retweet, throw us a subscribe. We'll be live. Do it now. Yes, we really appreciate it. Contributes a lot to what we do here on the show. Easiest way, the freest way to support us. W's in the chat across the board.
I think just based off
W's
one
in the
comment
chat.
I'm seeing in the chat, I think New Type wins comment of the day. Freedom Guy was banned because he was telling me Cardano solved the blockchain trilemma.
Yo.
Guys, we're gonna start doing a comment of the day. So
Yes,
make
I
sure you
agree.
comment. We're gonna call out the best comments in the chat.
I agree. Thank you, IOP. Thank you, Freedom Guy. W's in the chat. W's in the chat, guys. Great stream. We're gonna be crushing. We're on top of it. One down day. Can't get the boys down. Tomorrow we got turnaround Tuesday.
Turnaround Tuesday. Let's
Middle
get
of
it.
July. I'm 27 years old. Thank you for being here. Thanks for rocking with
Happy
the show,
birthday, Andy.
for supporting.
Guys,
We're
birthday
winning.
of the
Shine.
weekend.
Yes.
Give me some
Thank
air
you,
horns,
Rob.
give me some sound effects.
Thank you, Rob.
Happy
Thank you,
birthday.
Blue
Thanks
Type.
for starting off the show today.
Pay me in soul.
Much
Blue Type
love.
says. All right, guys. We'll see you tomorrow live 12:30 p.m. Eastern. You know where to find us every day in, day out. We'll be here. We'll see you then. We love y'all. See you guys tomorrow.